I know we've seen this all before, XRP to $10,000 thing and the whole flipping of the switch. I'm sure you're at least familiar with the concept. Simply put, a lot of people believe that there will be a flipped switch moment when XRP shoots up in value very quickly into extremely high numbers like $10,000 per XRP, which it's currently at $3. But if my research is correct, this is actually extremely possible and could coincide with a well-rumored Black Swan event that conspiracy circles are talking about, where the whole market's supposed to have a blackout crash. And this could all be caused by something as simple as the Federal Reserve lowering its interest rates. This week, for example, the Federal Reserve is announcing their rate cuts today. The Bank of England is announcing theirs tomorrow, and the Bank of Japan is announcing theirs on Friday. This event could happen at any time, but we're going to highlight this week since all the rate cuts are being announced. So if the Federal Reserve lowers rates, Japan could actually take advantage by raising theirs. This could cause carry trade to unwind, leading to a financial liquidity crisis, with XRP becoming the only viable solution to solve that crisis. Now, I'm going to give you the step-by-step to this liquidity crunch scenario. Step 1, the Federal Reserve cuts rates. Now, the dollar-dominated assets, U.S. Treasuries, corporate bonds, now yield less. Global investors start asking, why hold low-yield U.S. paper when I can earn more elsewhere? Step 2, the Bank of Japan stands pat or raises rates. Why would they do this? Because Japan's fighting inflation, and they want to stabilize the yen after decades of weakness. Now suddenly, yen assets look more attractive than dollar assets. The carry trade, which is borrowing yen cheap to buy U.S. assets, now reverses. Now, why does this happen? Because U.S. Treasuries are now yielding less, and borrowing yen is more expensive. Step 3, carry trade unwinds. Hedge funds, institutional investors, banks that had all previously borrowed in yen for their cheap funding to invest in higher yielding dollar assets are now faced with yields in the US that are falling while Japan is rising. So the spread, or their profit margin, disappears. They're earning less in US assets and paying more borrowing in yen. So now they rush to sell US Treasuries, stocks, and corporate bonds to buy back yen to close out their positions in an attempt to limit their losses. Step 4, yen buying spikes. These global investors unwinding carry trades, sell US assets, convert the proceeds to yen, all to repay the loans and cover margin calls. Now, the yen strengthens rapidly while the dollar weakens. Treasury yields spike, prices fall, because everyone is selling US debt. Step 5, dollar funding stress starts to appear. Banks, multinational corporates, funds, all still need dollars to settle these obligations. But dollar liquidity is drying up because investors are dumping US assets. Even though the Fed cut rates, demand for actual cash dollars soars as positions are unwinding globally. Almost a paradox. Rates lower, but dollar liquidity becomes scarcer. Repo markets, swaps, and foreign exchange feel the squeeze from the lack of liquidity. Number 6, institutions scramble for liquidity. They start selling whatever they can, stocks, bonds, and even commodities, anything to raise dollars. Why? They need to cover short-term funding gaps, margin calls or redemptions, and asset prices fall across the board. Volatility spikes, dollar shortage intensifies, and we are stuck in a true liquidity crunch. Step 7, global contagion. The European banks, France, Germany, UK, Asia markets, US corporates, and their funding strains ripple worldwide. The European Central Bank, the Bank of England, face pressure. Emerging markets see capital flight. And just to clarify, emerging markets are developing economies like Brazil, India, Turkey, South Africa, Mexico, etc. And capital flight is when investors pull their money out of these emerging markets in developing economy countries and rush it into financial safe havens like gold, for instance. This is all happening because global trade and debt are still dollar-centric. If the dollar liquidity seizes up, everybody suffers. This is where it gets really bad, because at this point, any small crisis, defaults, or geopolitical shock could tip the whole system into synchronized crash. This is where XRP fits in. In a crunch, in a liquidity crisis like this, cross-border liquidity dries up, banks are hoarding capital instead of moving it. XRP is a neutral solution that has all the systems in place RippleNet, for example, for massive adoption to happen instantly, as well as the ability to provide infinite liquidity with their ODL, on-demand liquidity system. I did an entire video explaining XRP's infinite liquidity. I highly suggest watching it. This scenario, if it happened, could cause numbers in XRP that are unprecedented, like 3 digits, 4 digits, or 5 digits. Anything's possible at that point. And I want to give credit to J-Man for this theory, whose comments on TikTok sent me down this spiral. So what are you going to do now? The Fed rate cuts are today, and the Bank of Japan announces their cuts on Friday. I hope you guys enjoyed this video. Please, if you took the time to watch this, like, comment, repost, bookmark this. It really helps the algorithm. Wealth, love, and authenticity to you all.